Hey guys, Gareth here and welcome back to my channel. So I've been covering some highly debated topics in the finance world in the past few videos that I've done. And this channel is all about giving as much value as I can in every single video. So up next, financial advisors. So some of you may be thinking, well, why do I even need a financial advisor in the first place? Well, typically, you'd use a financial advisor to sort of help you figure out how to invest some of the money that you saved up, or how to plan for your retirement, or maybe help you out with your insurance needs. And I've personally been exposed to many financial advisors over the years, and I've really learned what are some of the things to look out for. And guys, just like in most things in life, you'll have some good financial advisors that are amazing, and you'll get some bad apples. So this is really something that you want to get right. So stay tuned, because in this video, I'm going to help you figure out what is important and what traps to be on the lookout for. Just like you can get a bad teacher or a bad doctor or builder, so too you can get a bad financial advisor. I have witnessed firsthand, and I'm so glad that I was able to use my experience to prevent some of my friends being taken advantage of. And as my friends on this YouTube channel, I want to do the same for you guys. So first off guys, everything I say on this channel is just my personal opinion, right? I don't have any sponsorships or paid promotions. So I hope that you can benefit from me just speaking my mind and sharing my objective and honest perspective. Also, I invite you to stick with me right to the end, because I have a special gift for one of you, so make sure you don't lose out on that. Let's kick off with a real life example of something that happened just a few months ago, where I was able to help a friend avoid a very common scenario. So they had saved up some money that they wanted to invest, and they approached a financial advisor to come up with some suggestions of where they can invest their money. And on the face of it, the proposal kind of seemed okay. It had all of the expected asset classes like stocks and bonds and real estate. So, so far so good. Let's go ahead, right? Well, not quite. I started to take a closer look at the fees that were included in this proposal. And now remember, this is from a huge, reputable financial services firm. And take a guess what the total fees were in the first year. 2%, 2.5%, 3%? Surely not more than that, right? Try 6%. 6% total fees in year one. And then it gradually declines to a more affordable 3.5% from year 5 and onwards. I'm sorry, but that is ridiculous. Imagine you're investing $50,000, right? You're going to be paying $3,000 just in fees in the first year. I mean, come on, what for? And honestly, guys, I was super angry when I saw this, because I just felt like they're exploiting people that are maybe not financial experts or investment experts. And I'm sure that this happens all the time. The point of this story, guys, is to please make sure that you don't just look at the portfolio and the potential returns, but make sure you zoom in on the fees that are included in that proposal and ask them directly, what are the total fees of this investment? Because often this is kind of hidden, it's maybe in the fine print at the bottom or something like that, and not so clear. And maybe they tell you about one part of the fees. But guys, these usually have many different layers of fees. There's an asset manager fee, and an admin fee, and a platform fee, and an upfront commission, and a trading commission, and a performance fee. The list is endless. So you want to make sure that you have a clear understanding of what the total fees will be that you, as the investor, has to pay, so that you don't have some nasty surprises down the road. The whole point of you taking your hard-earned money and placing it in an investment is to see it grow. And the last thing you want is to later discover that it's now actually worth less. And it's not worth less because of some stock market movement or something that happened in the economy. It's just because of exorbitant fees that you maybe didn't pick up on earlier. When you invest your money with a financial advisor, their job is to do what's best for you. They have to always put your interest as the client first. So their job is to really understand what your investment objectives are, what are your goals, what's your risk appetite, and then based on that, come up with a strategy that's appropriate for you as an individual. But is this what really happens? I don't think that this always happens in reality. Depending on the commission structure, maybe the financial advisor may be pushing you to buy a certain product, to invest in a certain product, because there's a larger upfront commission. And this means that they kind of get paid straight away instead of getting paid over time. Or maybe they get some sort of a kickback or financial incentive to promote a certain product over another one. And usually the client doesn't even know about this. And guys, one telltale sign of this is if the broker, if the financial advisor is being pushy. If they're kind of putting pressure on you to make a certain investment with a certain product and they're being a bit impatient with you, this is generally not a good sign. Here's a little example to show you what I mean. Option number 1 is super risky and you're probably not going to make much return. And option number 2 is more moderate risk and pretty attractive investment returns. But I think that you should go with option number 1. Don't worry about the commissions. I know option number 1 is much higher commission up front for me, option number 2, but that's in the fight. Don't worry about that. It's what's important is that I think you should go for option number 1. I'm the expert, I'm the financial advisor, you can trust me. I've been doing this for many years. Option number 1 is perfect for you. Sorry guys, I'm not an actor. But I hope you get the point. Okay. Sir Anderson, come have a seat. So I've done my analysis and I've come up with 2 potential investments for you to explore. What's the commission? So option number 1 is a 3% upfront commission and then a 0.5% every year. And option number 2 has a 0.25% annual commission. Yes, option number 2 is cheaper. Yes, the returns are higher. Yes, the risk is lower. Cool. So tying in with putting the client's interest first, there is another point here that I want you to be aware of. When you invest your money in a product that financial advisor recommended, just remember that you are the investor and you carry all of the investment risk. If that investment does poorly and maybe drops by 40%, you will lose 40%. You are the investor, it's your money. The financial advisor would have already received his upfront commission, so he's happy, he's already been paid, and maybe he just gets a slightly lower trailing commission, which is a percentage of the total investment. So just remember that you are the investor and you need to be comfortable and really understand the investment risk that you're taking on, because the financial advisor gets paid either way. And a good financial advisor is going to really take the time and explain to you very clearly what are the investment risks that you're taking on. As the investor, what are you in for? What can you expect? And make sure that they're recommending something that's appropriate and suitable to your individual needs. Also guys, if you're liking this video, please just quickly give it a thumbs up and subscribe to the channel. And remember, as I mentioned earlier, that if you stick with me to the end, there is a special gift for one of you and you don't want to miss out on that. Let me ask you this. Do you have more confidence to go for a trainer that's in shape or out of shape? Or a dentist that has good teeth or bad teeth? You're probably going to go with the in-shape trainer and the dentist with good teeth. It's just human nature that will be more confident in the ability of somebody that seems to put their money where their mouth is. It just gives them this more credibility. Similarly with financial advisors, it doesn't make sense to take financial advice from somebody who doesn't have their own financial affairs in order. Or even more importantly for this, somebody that doesn't even invest in any of the products that they're trying to sell to you. It's a question worth asking, If these products are as great as they're explaining it to be, why are they not investing in it themselves? So it's worth asking your financial advisor, what investments are you making right now? And see if their answer overlaps in any way with some of the products that they're trying to sell you. Yes, everybody has their own risk appetites and investment goals, but still it would be interesting to see if there is any overlap at all. Guys, please watch out for this one. If something sounds too good to be true, then it probably is. If somebody is promising to make you a millionaire overnight, or to double your money instantly, then the chances are that it's probably a scam and total nonsense, and they may just end up stealing all of your money. I am constantly removing comments from videos on this channel of scammers that are promising easy peasy ways to make thousands of dollars, usually through Bitcoin, if you just send them a telegram or an email or a WhatsApp. And if you check out the comment section in some of the bigger channels, especially the finance channels, they are just flooded with all of these scammers. And this is not just limited to the YouTube comments, right? Guys, this is everywhere, with many people have been caught out in pyramid schemes that have even been recommended by their financial advisors. So, if something seems too good to be true, then it probably is. Now, I promised a gift at the end for one of you, and here it is. Guys, in the comment section, once you subscribe to the channel, just go into the comments and type, "I subscribed." So what I'll do is I'm going to randomly select somebody and offer them a free financial consultation. So, have you had any bad experiences with financial advisors? What happened? What did you do? Let us know in the comment section so that we can all learn what are some of the things to look out for. So that's it for the video today, guys. If you liked it, please give it a thumbs up and support me by sharing it with other people that you think may benefit from watching this as well. You can also follow me on Instagram. Here's my handle, and I'll see you next time.